For more now on the state of banking, let's bring in Brent Beardall, president and CEO of WaFD Bank. By the way, he is only the 6th CEO in the bank's 100-year history, if I've got that right. Brent, welcome back.
Good to see you, Kelly. Good morning.
Good to see you, too. And I think, to say this is to emphasize that your bank has been through plenty of difficult times. What do you say to people after a quarter like this about the variability you continue to expect, the earnings pressure you might face from higher, costs on deposits, and how long this period might last?
I'm actually very pleased with this quarter, all things considered. Everyone knows what happened to mid-sized banks in the wake of Silicon Valley, especially West Coast banks. And everybody was wondering what happened to deposits and what would happen to deposit betas. And we were very happy to report that in the month of March, we actually had net deposit inflows of $25 million. For the quarter, we were down just shy of $100 million, but that's less than 1% of total deposits. But I think what you see big picture is that deposits are flowing from mid-sized banks to the largest banks. I think JP Morgan announced this morning $37 billion of deposit increases, and their margin expanded. So for mid-sized banks, we're in a tough position right now because of the perception of the too big to fail banks, that they have this implicit guarantee. And customers ask us every day, is our money safe? And I have a great answer, I believe. But the fact that we have to answer that question is not a very good position to be in.
Let's talk about one of the things that seemed to cripple Silicon Valley Bank, and that was their wrong-footed holdings of longer-term treasuries and mortgage-backed securities. Where are you keeping your excess deposits, and how do you avoid getting tripped by the same kind of wire?
A very good question. A reason that they went into those securities is their loan-to-deposit ratio, I believe, was only 42%. So for every one of their deposits, they only had 42 cents of that invested in loans. At WaFd, we're very different. We are a financial intermediary. We don't want to be a net investment player, if you will. So we have over 100% of our deposits are invested in loans. So that's how we've kept from making the same mistake they did. And in fact, we went so far in today's release to say, if we included the losses on our held-to-maturity portfolio, what our equity would be, and we'd still be at 10.5% equity to assets.
I think the last time you were on, Brent, you were optimistic or pleased by the loan growth rate that you were experiencing. Are you still?
Yeah. In fact, we've had to temper that loan growth. In the December quarter, our loans grew at a rate of 22% for the annualized in the December quarter. We had to bring that down in this quarter to only 6% loan growth. And some of that is happening naturally because of what the Fed has done and our clients pulling back. But that is in reality because of the deposit kind of bind all West Coast banks find themselves in because of what's happened with Silicon Valley Bank.
Brent, where are those demand for loans coming from? Because I was struck by Warren Buffett on our air earlier this week, who said that in railroads and in cyclical parts of his businesses, things are actually down quite substantially. He wasn't super bullish on the economy. So where, and obviously everyone knows about commercial and office real estate being a worry spot, but where are you seeing still quite strong demand for loans where you feel comfortable extending credit?
Yeah, I'm a big believer in housing, especially in our 8 Western states. We have net immigration. We have a huge undersupply of housing. So there's a lot of multifamily coming to the market now. But I think what's going to happen is so many people are pulling out, then you're going to see a dip in housing. So I believe in multifamily housing is a great category. I think single family housing for rent is another fantastic category. So anything that's shelter based, we're pretty bullish on right now.
Yeah, I think that phone was somebody calling and asking for a mortgage there, Brent. Last year, you announced that I believe it was an acquisition of a California-based bank, which will take you into California. Give us an update on where that deal stands and what you expect it to do for you.
Yes, no, we're very excited about that deal. That is Luther Burbank Savings in California. They're an $8 billion bank. We announced that deal in early November last year, and we're in the middle of our regulatory application process, and I think it's going well to date. But as you know, the regulators are busy with a lot on their plates, and bank mergers are heavily scrutinized right now. So we are in the wait and see game in terms of how that goes. But one of the things we did is we hired a commercial banker in California that used to be the CEO of a bank there, Rabobank, and we're really excited about the prospect of what we can do in California. California, from my perspective, I'm from California, and I've looked at so many banks over the years that have gotten over-levered in California. And what Luther Burbank has shown us is there are some very strong credits available in California. You don't have to over-lever. They have a multifamily book that's on average, I think, 52% loan to value.
All right, Brent, great as always to see you. Wish our friend Brad Good a happy belated birthday for us.